What are the best SBA 7A loan alternatives for you and your needs? Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, business loan broker expert, and pre-underwriter slash underwriter who's been able to help a lot of people get the right type of funding under the right strategic partnership and roadmap. Before I get into things, I just want you to know a little bit about my side. I have multiple businesses, so I know what it is like getting started from the very scratch bottom as a startup, thinking you could get an SBA 7A loan. And if you couldn't get approved for, what are the alternatives and what is the better fit? So I'll get into that in a second. And then also continuing as a non-startup, I have a business in the digital marketing agency, lead generation space. I started that one way before this one. I have one in the health affiliate marketing space with vitamins and supplements, ergonomic desk chairs, seat cushions. I have them right here. Can't see them. And then other verticals in the affiliate space, helping business owners understand how to use different software tools and how to get more leverage in their business, then to other ventures. And then this has been my primary focus for a while now. I am an introvert, very analytical, cerebral. It's hard for me to be on video. I've done many, but it's because I've learned the skill and I've challenged myself to grow in my uncomfort zone. And I think this is a format that you'd get a lot of help from. I like to write more. I'm a more behind the scenes kind of person, looking at numbers, analytically breaking them down. I review documents every single day, bank statements, tax returns, P&Ls, debt schedules, credit reports. Did quite a bit of that earlier before getting on here. And so I have a time block that I do a lot of the things I have to do. I have to wear multiple hats at times. And I just want you to know that I'm a very loyal person at my core value and values as a Libra, very emotionally controlled. Again, just not to reiterate, but more of the cerebral, introvert, analytical type who can't sit in front of a computer nowadays and just review documents without like a word and going through that a lot, calculating. So with that said, let me get into some of the things on the SBA 7A loan, and then I'll get into some of the alternatives. I won't spend too much time going through all of the requirements on the SBA 7A in this video. I'll try to leave you one down below. And in fact, there will be a questionnaire form down below if you haven't gotten started yet. If you're not a part of this ecosystem and this culture like many before you already are. In fact, if you've been watching me for some time and haven't committed to it, there's a questionnaire form in the description if you're watching this later on YouTube. It should be one of the very first links you can click on. And then there will be I created this landing page and it'll be two buttons. You can scroll through the page and learn more if you'd like. Maybe the format changes so it won't look like this, but you can click from one of the two buttons and then it'll bring up a contact form or a questionnaire form. It's not an application. I am not a creditor. You do not have to worry about any of that. I won't peer pressure you or pressure you of any kind. I don't even like to use this word, but I'm not a salesperson in the form of context that I began there. I went into academics way before anything like this. So you're going to get somebody who very much so cares about you as a person first and then in your business. That's what I look at, improving people's health and relationships. The funding, a byproduct, or that's like second or third to helping you in other various ways, and how I've worked on myself for quite some time and just improving. But that questionnaire form will be down below in the description. Fill out some simple funding details depending on what you have and what you have going, where you would like to go. There will be a box to describe your financial grant list. That's very exclusive. So if you guys would like to pick that up, not just a partial grant document that I also have, but the next level, you'll want to fill out that questionnaire. It might change things over time, but that's where you want to go through to get that full list. And it'll help you in many ways instead of just getting an SBA 7A or you're looking for other ways of funding or other forms that are free. And not always is that best, and we can do a combination. So with that said, the questionnaire form will be in there and I'll analyze and I'll evaluate. I know how to pre-underwrite. I'm very organized in what I do. I'm very punctual. I don't mess around. And so another thing here with the SBA 7A, credit requirements, if you're a startup, and I also have a quiz questionnaire for the SBA, I'll try to link down below. If not, it's okay. But as a startup, you want to have like 25 to 30% of an equity injection. And if you do not, we're going to base this off of experience. So one, have experience. Two, how much equity would need to be invested? How much liquidity do you have on hand? How much cash in the banks? Do you have a secondary source of income yourself or someone else that you would have to bring in to help? So you got to look at that. Who will guarantee the loan, 20% and over, or if it's one person, how is that income going to come in? How can you provide that equity injection? Do you have enough liquidity? And I've had people like recently, and this is one great example, not the only one, but if you have fixed assets and you own them free and clear, even better, and it's of a high value, enough equity invested over one or multiple properties, and then you have other assets, equipment, you have a secondary source of income, perhaps it's not your only one, and you go, well, I retain this much salary, this is how much actually goes into my account, this is actually how much I have in assets, appreciation, the appreciation value, and then there's other things. So that helps your case a lot more. And if you had the experience in that business as a startup, let's say you're in the healthcare, caregiving, and you've already done 3 locations, but you want to rebrand, or you're looking to do something in a specific niche in that's a little bit separate to it, or something still in healthcare that's related to it. You have operations, management, have you guided a team? Like, we want to know your experience. We want to know your resume or resumes. And there's quite a bit more things to go through. But if you don't have the experience, it doesn't necessarily mean you'll get declined. It just means it's better to have, somebody or yourself have enough of an equity injection. Yes, it's going to be closer 25 to 30. If you have that experience, it's well-rounded, and you have enough in assets, enough in liquidity, equity invested into this, that potentially could drop down 10 to 20%. I've seen it, but not in every case, and it's a hard market. So keep that in the back of your mind. And so the alternative, I'll get into it in a second, but for all types of SBA, you can realistically drop down to a 660, sometimes 640. I've even seen 620 credits. But in this market, ideally 675 and above, but better, 680, and even better than that, if you're looking for a higher amount up to 5 million, the SBA loan lenders are going to ask for 700 plus credit. And that's variant depending on the industry, depending on the operations, how you generate revenue, the sales process, however you're consuming and collecting money for your product and or services. So it's accompanied by many different sources that we need to look at. Sorry if I keep doing this. I have my laptop in front of me. I want the light on, as much light. It's kind of dark right now outside. I have the window right here in Washington weather. But with that said, it's better to have 675 if not 700 plus credit. That's ideally it. The higher you get in the amount that you're asking for, even over 500,000, ideally just got to start off with 675. 700 plus is best, and it depends on the industry, depends on the use of funds, depends on a various amount of factors. And I have this, I've helped out a lot of people, not only with the SBA, but all services. I didn't say this, but credit, cash flow, collateral, equity, liquidity. I've been doing this for a while. I've been able to help people, present with people, show them exactly what they need to know before they walk into that application. And all services are different, so each person has a different credit profile, each business has different revenue, and so I'm able to look at a lot of documentation and really understand. But that's a bit on the credit side. They're going to ask for normally a FICO SBSS business liquid credit score, and that normally goes up to 350 or 500,000 in funding amount. Anytime you go over the 350, sometimes over 500,000, it's less of a requirement. And they're still going to want at least an aptitude of 675, if not 700 plus FICO, Experian credit. And there's an E-Trans score. So there are things on our back end with the bad at times. You got to understand that. So I made the right decision, I believe. And so I don't look at it in terms of how much I earn. I don't earn until you earn. Being very honest with you, that's how I am. I don't charge you anything up front. You don't have to worry about that with me. Others will charge you consultation fees, packaging fees, and even if you get the funds or not, or don't get enough of it, hey, they walked away with what they got, because a lot of these people know that a lot of the times you won't qualify. Or if you did, you won't get as much, but hey, they made enough on the front end, not as much as they could have made maybe on the back end, but now they can recoup and then they can continue. Maybe they didn't turn a profit. They were still having a lot of expenses, but that's one thing. So With that said, that's kind of a format. On the FICO SPSS, they're going to look at least 155, if not 175, depending on the type of SBA loan. Sometimes it goes down to 140. I've even seen it less than that, and in between 140 to 155. And this is just how well you're handling your business debt payments. Are you making payments? Is that showing? Are you looking at your business credit report? It's very important you keep track of these things, looking at your business credit, making sure you guys sign up. And I won't go through all of that right now in this process. I can share it with you guys in time. So after that, 350 or 500,000, the FICO SPSS can still be factored in. They'll still look at that. It won't weigh as heavy because your personal credit will. And they're going to look at it a little bit more deeper and what you have, and then the business credit score or scores a little bit. And FICO SPSS is a little bit different than when we're looking at the Intel score of a few of the others. But with that said, that's a little bit on that part. There's more I can get into on the credit requirement. Annual gross revenue, you really want to be in the 250,000 and above range. 150, there's a specific product, sometimes even less than 250 to get a traditional SBA 7A loan. And we're looking at the past year's tax returns. We're looking at P&Ls. I'm looking at a lot of this. And so being able to base it off of what you've done last year and the years before that, what's the trend? Is there enough historical cash flows? Is there enough historical profitability financials to show? And the SBA right now has changed their guidelines in a way where it's less about what you're currently doing, and it could be more about what you're going to do in the future within cash flow profitability. So it's become a little bit more leisurely. I'll try to link you to that video down below. And if you don't watch it, when you fill out that questionnaire and I submit things to you, I'll show it to you there, and you can access it from that PDF or however I presented it to you. So there's a little bit more leniency on that, on the financial track record of the business. And it's true because I've been able to see people go through that, and it hasn't become so much of a burden as it was before. And I can pick from a lot of different industries, from healthcare technology together. It's a great one. If you guys want to get into that, good one to get into right now in the market. You have a variety of others. Anything in home caregiving, adult care, that's a big one right now. That's still thriving in the downturn and economic impact marketplace. Those are the types of businesses that continue to push forward even in these lasting effects. I don't want to get into too much of the economy, but if you've been following, you should know, or to a degree, I guess. But on that side, more revenue you have, the better. Have more than, don't just do the minimum, 250K. Well, I did 250K. I expected to get 500,000 in SBA. No, that's not how it works. How are you going to sufficiently service the debt, especially when you only showed us that you can only handle 250,000? And over the 2 to 3 years, and we looked at all of the things, the balance sheet, the year-to-date P&L, like I looked at all of that. Materials and supplies, cost of goods. So I'm looking at it all. I'm calculating my own things. Not just because what it's shown there is, I'm not going to calculate. I'm looking at things. I'm pre-underwriting these things. And so when I'm looking at it, I'm going, okay, yeah, they won't sufficiently be able to take on 3 times the amount that they're making. That's not going to happen in many cases. You're going to get less than what you're making. And you only get approved normally between 10 to 20% of your annual gross revenue. There's a few other things that we have to look at, not just based off of annual gross revenue. There's assets, fixed assets, how much, what's the track record. There's a lot of little things with the SBA that's harder to determine how much you can get approved for. But for an example, if you're doing $5 million a year, yeah, $1 million is more feasible. Getting between $750,000 to $1 million is more feasible. Anything up to $1 million is feasible. And so you just kind of take that 1-to-5 ratio at times, but other cases it's not always like that. So again, it just depends. So there's a few things there on the SBA 7A. I can go into this topic deeper, but documentation about 2 to 3 years usually to close personal and business tax returns, P&L, year-to-date P&L balance sheets, last year's. Sometimes we'll ask for 12 months of the last year of bank statements. We want to know how much liquidity. We want to know how much cash on hand you have. How much have you been cash flowing? Have you been taking on other debt that we can see on other statements, not just bank statements? And so we want to make sure everything that aligns. Cash flow is just as important. So doing a global debt service coverage ratio, profitability analysis. I'm not going to bore you guys with this, but this is stuff that I do on my end. I have to do quite a bit of it. It's not just on the surface level. You look calm and ready. I'm kidding. But I got to look through those things to really understand your footprint, where you are at. So that's a little bit about that. I don't want to go too deep into it, but profitability is what matters. It's preferred. Not always does it need to be in the consecutive 2 years. Other times lenders will look at it where you have to do it for 2 years at least. and other times the most recent one is best. If you had one, the last one, was it a COVID year? Likely not, because of where we are now. What kind of tax returns do you have? Are you still in an extension? Have you filed for an extension? Excuse me. It's very important to have this. And if you don't have enough revenue that you're generating, enough track record, and you're just showing us a year's worth, like, we need to track this back. Like, what did you do last year? What were your margins? Like, we got to know those things. So there's a little bit more on the documentation, the credit, the revenue, cash flow, but I'm not going to spend too much time on that. Let's go into the alternatives. And again, the questionnaire form for you guys will be down below in the description. So when you're looking for an SBA loan and it doesn't work, startup, non-startup, I can share with you guys so many people that will land on my website. Like swiper, no, swipe. No, but if you were to go to my site, I am able to track where people are landing on my site. I'm able to see like where they're clicking on. I have tracking software that gives me data. I'm a data guy. If you guys don't work with the data, how do you know what to continue to exploit? You're just going to explore. You're just going to be like Indiana Jones exploring. He had a mission. He knew what he was doing, but other people are out there to explore. You always explore. You think something isn't working, but do you really know for sure? So explore, exploit it, and then iterate it, and make it work. Fine-tune your margins. Understand your conversions. Understand conversion tracking. It's very important that you guys know this as business owners and entrepreneurs, because it can all go chaos. If you're not preparing for a season of inventory where you only have enough, there's so much demand, less supply now. What did you do to make sure you will bounce back? Or what did you do to prepare yourself for that? Nothing. You thought it would have worked out the way you thought, but you weren't tracking it. See, what you don't know hurts you more tenfold, 10 times faster. It can put you in a hole than what you know. What you know, okay, sure. What you do with it is something different. What you don't know increases 10, 20 times faster. It can put you in a hole. It's that quick. And sometimes it's hard to get out of. So take more action, speak less. I'm an action taker. I speak less. If you're a startup, let's start there. There's creative credit-backed funding. I do this every single day. In fact, before this, I was doing a lot in my emails. I was reviewing credit. This is where the credit reviews come in. And not only for credit back, but for other types of funding. Myself and or the team, just depending on how busy I am and things need to work out with other services. I need to kind of do a little bit of other things. So I have my hands full in projects and other tasks that are also more urgent. That's what happens. But when you're a startup, you're looking at credit. A lot of people will still text message me or email me and go, yeah, this is great and all, but they're going to check your personal credit. Like, I'm not judgmental. I'm never judging anybody. But in my head, I'm asking, why did you think that way? Like, I want to know a deeper root. What's your root of the cause? Like, what makes you think that that is not okay? I want to know it from you. I want to hear. And as an entrepreneur, I question things. Like, why do you think that way? How would you improve this to make it better where you can increase your margins at 15% capacity? And that's where you want to be in the next 3 months, if that's what you call capacity. So I'm always questioning, like, where's your belief? Where's your fear coming from? Because that's a belief, a preset notion you have. When you go, well, they wouldn't pull my business credit, but they would pull my personal credit, and I don't like that. And I'm like, why are you thinking that way? Like, has anybody educated? If nobody has, it's okay. Not everybody has the answers. That's what I'm here for. And I don't pressure you guys. I don't judge you, but it's when you're not doing what you're supposed to do with the information you're given. And what's even worse is what I dislike, and this is my biggest pet peeve, is when people know what they're supposed to do, they're saying they're going to do it, whether they said it to me or they said it to themselves. Don't even tell me if you're not going to do it. Tell it to yourself, but don't lie to yourself. And you don't do it. Even worse is when you set a time. You put a time in it, and you still didn't do it. Well, something came up, I get it. Things come up, okay. But you never did get around to it, or it took too long. It wasn't that important to you like you thought it was it? And so I'm tackling now on accountability and responsibility, and it shows me you're not. So that's aside from this, but credit-backed funding, you're looking at having good credit. If you do have less than good credit, let's say you're 650, 660 or so, 670 by some cases would be considered good credit ranges, but 680 and above, 700 plus is better. But if you have anything less than that, we have to look at and see what you currently have on your credit. Every single person is different. So I have to better determine like what do you existingly have, how many inquiries in the last 6 to 12 plus months, 2 years, is it too many? Do you have too many low accounts, too many new limits with low limits, too much recent activity, could be shopping around, acquiring other loans, acquiring other like property, a home mortgage. It could be a lot of different things. You're probably an escrow. There's a lot of little varying factors that I've seen, and there's really nothing that I haven't seen. Honestly, I'm not saying that as in like I'm not cocky. I'm just very confident and certain. That's my personality and how I was brought up, and very thankful for my family, my younger brother, and everybody. And so I was taught ethically to do things right. But when you look at credit backed, we're looking at least, if you wanted to do this, like here's where we can come in a lot more, and I can, is if you're trying to credit stack. There's this credit card stacking service. This is basically where, think about it like as if you're building a house. Brick by brick, you're first finding the right location, the right ground, the right soil, the right place to build the perimeter and then the area of it. Enough square footage, enough place, enough solace for somebody. And you're building it on that soil, building it on the bottom and the concrete, everything you're putting together. Then you're putting the structuring of the house, the wood, everything in place, and then you're layering it over with everything else you need to, slabs. You have the roofing, the shingles, everything you're putting together. So at the end of that result, you have this house and this foundation properly set. And then now you have people or a person in the home. You have people that can come in and out. You can maximize the capacity of that area now with shelter. So think about that as like you have your starter cards, and then you're evolving into getting more cards. It could be personal and or business. But now what you're doing is we're adding multiple business credit cards on top of one another strategically. This isn't in a way where you go, well, I wish I could get. No, it's not wishful, hopeful thinking. It's deliberate, hopeful. And that's where you have to get in is say, well, what is the best business credit card or cards for me to go, and what sequence? Everybody gets that wrong. I've done this for myself. I know exactly how to go about it and help others out. And so it just depends on the makeup of your credit profile. But some of the best cards out there you can get from Chase, the Chase Unlimited card in cards. And so some of those, a cash card, they're good to go after. But is it the makeup of your profile is what you have to ask. So there's a little bit there. There's credit stacking on the business side. And the purpose of a lot of this and the advantage, is to get as maximum funding as you can, because you have to look at how you use your funds. So somebody, they go, well, I just really needed a $10,000 card. Well, what are you going to use that $10,000 for? Well, I got expenses of about $5,000, and then I need to have inventory coming in. I need to make purchases over the next 30, 60 days. And when I make those purchases, I'm going to be in this much debt, but this much revenue, I'm not going to have enough margin. So right before you told me any of that, I already know that a $10,000 card by itself, or even a $20,000 card, is not going to move anything. You're just going to be continuing just paying off debt and taking a little bit of inventory while some of your competitors are already beating you on that. Then there's other reasons too, not just for inventory, but for depending on how you use the funds, there's a lot of ways. So that's one example. And if you want to add higher cards, we can look at doing like one card, get you approved for 20 with the disclaimer. Everybody has to go through, and it's dependent on the results of the individual. So 10, 20, and then you probably get a card at 30K. That's your highest card. Obviously, the 30K is what people tend to use the most of. But again, it comes down to how you use your funds. I've preached this so many times. Once I understand your uses of funds, like I can't just tell you go use the highest limit card when I know that a lower limit card, because of the rewards or because it's not the time to buy so much, or it's not the time to put a down payment. It's like vendors and supplier payments. Like I know for a fact, and a lot of people don't really know how to show you how to exactly use your funds. I've improved businesses' cash flows, profitability. I've sat with people. I've gone through their margins currently. I've gone through what they want to yield with whatever product or service rotation, or in adding another service to it. But there's a lot of things. So credit stacking, that's a great place to begin with. And ideally, we want 700 plus credit. If you don't have the credit level, then there's credit repair. Or if it's just some kind of, you need to pay down some balances with the payday loan or something else because of utilization being high, we can work with that. And so if you're interested also in credit repair, I'll leave information for you down below, but fill out the questionnaire form. Like, you'll get everything all in one place. Like the business credit cards, the grants, you're gonna get the credit repair, the credit, cash flow, collateral, equity, liquidity services. You're gonna get everything. Whether you can or can't qualify, it's gonna be customized to you, and I'll show you where to look. It'll be long, but I'll show you where to look, and you'll get all of it in one place so you can reuse it over and over and over. Again, it'll be in your best benefit, and I'll give you a conclusion and a roadmap what to do based upon your details. So 700 plus credit on all 3 consumer credit bureaus. It used to be about 680 before, but the market's changed. And so that's what we're looking for. And if we need to improve your credit, you can also bring in a credit partner. And per EIN, per business. So if you have another partner, if you want to add somebody to the operating agreement, register them, have them at least 10%. I'd probably do more if you needed more from them, at least at 10. And what I would do is have them, if they have better credit, come in and be a CFO or be a partner of any kind, a financial partner, and they can continue to finance the business until you improve your credit, or one-time finance. Or you improve your credit so then there can be a balance transfer over from those cards or one card over to another one, whether that one's already expired, the 0% at that point, or not, you're able to move that over to another card. But that's a little bit about that. They can help you, and then over time get more credit partners. Perhaps you have another person in the business per EIN, and then there's another person out there with their own business that wants to help you out. Or if they don't have a business, you can use a friend or a family member, somebody who can help you also get like term loans, installment loans. And at those points, 680, if not 700 plus credit is preferred. 670, plus is something we'll look at. Term loans, installment loans, personal lines of credit. And each provider is separate and different. So if you're asking like, what does this lender look for? And this, like, I can go on for hours upon that, but I'll share it with you in time. Like all this stuff, like I'll share with you that stuff that's not even publicly released. And it's going to be in your best benefit to do it. Trust me. My processes will help you. Once you're in this, you're going to see how efficient this really is. I'm going to save you so much time that by the end of the day, you're going to ask yourself, did I really just go through that? In that way? Like, this is already untraditional, so I want to make sure we're in the best of health and relationships, and in the best way that when we get home to our own family, that we have enough energy. We don't want to be laying, like, I remember the days still, and I'll still have these, where I'll like lay down on the bed after I've showered, and literally as an introvert, it's so hard because now cerebrally, I'm just kind of tired and burned, but I know what sacrifice takes, and so I just want you guys to make sure you guys are in the best position to do things, and everything is in tip-top shape, or as much as you can, and continuing to improve characteristically if you need to. That matters a lot to me in a person. So there's that on the credit side. I can go on and on about this, but I've created content for this. I'll try to link it to you down below. Great startup option, use a credit partner, a payday, pay down loan, advance option is what they're more commonly known as and referred to. That's one side of the equation with credit. There's a few other things we can do. There is also cash out refinances if you have assets. If you own commercial real estate or investment real estate that you own, is it free and clear? How much equity do you have in it? What's invested in it? How much can we withdraw from? How much is it proper to net as much so it makes sense ROI-wise for you and everybody? There's that part. There's equipment you can do as well from that. There's a few other things. And so that's another part of it. Liquidity, equity, whether you're trying to fully liquidate or you're trying to pull out equity from. There's also other forms like a HELOC, home equity line of credit, home equity loan. I'm not going to spend a lot of time on that. Personal lines of credit, 401k, IRA financing. There's a little bit about that I do as well. So if you're interested in that, stocks and bonds, there's other forms, mutual funds, marginal accounts. There's a little bit more we can go into, but now we're going into a deeper way. Venture capitalists, angel investors, crowdfunding, equity crowdfunding, peer-to-peer lending, street shares, things like that. It's become a little bit more harder, but there's that. There's grant opportunities. There's quite more in getting equity partners, things that you want to invest into to help you with. There's quite a bit more I can get into, but there's that. SBA microloans are a great one to go for. They normally go up to 50K. The average that I'm seeing is about 10 to 13K in this market. So that's another one. But how much will that money actually help? Can it? Sure. but are you going to be back in the same position you were? Like, that's what you got to look at. If you're just using this money again for or a rainy day, or you feel like it's just you just want to have that money sitting in an account, like, you got to think about it too. Are you really growing your business? Are you fueling it with funds, or are you just taking this money and sitting on it as just working capital for whenever an emergency comes up, you need emergency funds, or you need to be putting people back on your payroll, or whatever happens? There's a lot of other things that I can get into, bills, utilities. So there's that. So there's quite a bit. There's other options. Cash flow backed. If you have at least 3 months of revenue on your lowest month in the last 90 days, at least 3,000. There's other ones out there that may do less, but not usually in this market. So it's 3,000 and above usually is the minimum in the last 90 days. And I have the best lenders for this, the best providers. Sometimes there's just one that's only going to work with this, depending on your details. So there's quite a bit there. That's one thing. And then there's other revenue based lenders and providers that I'm partnered with, and the best in this industry. Depending on if you're an A, B, C, D plus tier type of client, you have a different underwriting for each, and each lender looks at a specific niche or a target market or a specific business. So I have to understand the details of what you bring, and then that way I can better align you with that right lender and more. So you're not just going out there shopping around. Shopping around, guys, is not the best thing you should do. You just end up hurting yourself. Your credit's already put out there. And if you don't understand what backdoors are, even a lot of online marketplaces will do this. Well, they're going to shop you around. Well, it didn't work with us, but I have a agreement or a partnership and a contract with these lenders. Let me go see if I can send them in. I can still have a second chance to revive this. And they'll do that. Or they'll send it to somebody else, somebody from that company, sneaky, that others don't know. They're working for somebody else, or they're planning to go move and work for somebody else, or not. But they're saying, hey, I'm going to send you part of this. Can I get at least 15%? Can I get at least 5% split? And it's very unethical. Not everyone does that, but there's a majority. There's a lot that's happening right now, a lot of scams. Even if it's just a soft pull, you have to be cautious. Even if you thought you went to the right one and they weren't going to do all of that, you still don't want to put your information out there. If you're getting declined and you don't know, and you're not getting maximum funding from the right lender, you're going to the wrong one. It's a difference. I've seen it. I've seen a difference of over 50 to 100,000. I kid you not. I've had my own clients come back. Others that they shouldn't have gone to, behind my back, behind the people that even shared them with me. They went behind their back. Or it's me directly and only me. And somebody gave them like less than 15,000, and we were giving them like over 90K. Because of the leverage relationship they already had with me and the lender. And they went against that. They could have just turned and asked me if they needed a second position. But no, they didn't. Not to my surprise. But the real ones really do. If you're not a real one, you'll do what you want to do, and you'll be driven by your ego. You'll be driven by your arrogance, ignorance, stubbornness, cockiness, and many more ways. Now, if you have that, and we don't have time to help shape or personally develop that, let's leave that out the door. We don't want that affecting us and creating this friction and resistance. There's none of that. I hardly ever, rarely, like honestly none, have that problem with people. And if it's ever something, it's from the other side. I've already done what I've needed to. I've done everything, not only from my career, my business and my businesses, and to work on myself for a while, only strengthen this more and then this, not genetically gifted, but I've always had this, and I just had to work on this even more to bring it up to a higher level. And so I just want to make sure you guys are in the best position and you guys can get the best out of everything, not just one thing, but multiple. So that's that. There are higher tier lenders, not only with 3,000 minimum. Oatmeal. So 3,000 minimum, 5,000. There's also 10, 15, 25. Once you get into like 25,000 and above range, depending on the industry as well, like contractors, truckers, ideally 50,000 and above right now in this market is better. 25,000 contractors, those of you in construction, yeah, it's okay. But it's also a problem because of how you are already depositing. So if you're expecting like 100,000, only doing 25,000 on your lowest month, who's ever going to lend you $100,000? You can't even prove you can handle $100,000 in a month. So who's going to give you 25? Who's going to give you 100,000 a surplus? 4 times that. Doesn't make sense. Now, if you went to a bank or you tried to do an SBA loan, well, we got to look at a little bit more things. With some companies doing less in revenue or less per month, probably get 100,000 and above, between 100 to 200,000 if you're doing like 20 to 50,000 sometimes. In the 50K range, it's actually a little bit more predictable that it'll be closer to 100K and above. But again, I have to look at a few details to better understand that. And I haven't gone into every industry. If I spent time with you guys on every industry, I know my stuff. When I'm not here, I'm working. I hope you guys can really appreciate this, because if you guys go searching on YouTube, I can go on there, SBA 787, and I look through those videos like, oh man, I gotta save these people. The majority of them. Sometimes it's not. Other content is there, it's good, but it's like, that guy packed the punch. And there's sometimes where I thought I left something else, so I had to recreate or add another one. And I've refined it over time, and I know exactly what you guys are looking for. I know exactly the mindset. I know the psychology you guys have. And I'll tell you this before I get into the collateral. So what it comes down to is you're assuming me. You don't know me. And I'm not saying that as in like you don't know me. Like some people get offensive or defensive, you call it. I don't. But I want you to know what my core values are. As I said earlier, I'm very loyal. Integrity, I value a lot. Honesty. I have a high standard, unlike the average person. And there's nothing wrong with being average. I have a problem with it. Once you ascend to a higher level, you'll have a problem with being average, and you don't want to ever go back to it. But if you're just continuously average, just living your day, you're living to make ends meet, and you're just feeling like exhausted when you come home and you're like, I just need a vacation. And that's the reason you take a vacation for, to run away from your problem and problems. That's not good. Not a good sign. Wouldn't you rather have a vacation knowing, yes, I still have to make ends meet, or I still have to do things, but now I can take a break from just the work. I worked my butt off. I'm going to be going on vacation here soon, and I feel like I've earned it. Like, I don't take vacations, and I'm going to just do that. I can be a workaholic a lot of the times, and I treat this like it's my very first day. Think about little Michael here with his backpack walking into preschool or kindergarten, dropped off by his mother and or dad, and I just look back and I give him a smile and a wave, and I go into. I remember my days in that preschool, kindergarten. I remember all of that very well, and so I always have that thought about the next person. The next person needs this and need that, and I don't do it for the money. I don't do it at all. Like, I kid you not. I get it's a business and there has to be there to make sense doing it, but I give back to the community. I give back to people for them to improve themselves. I give back for my own self, my own mental growth, even more from what I'm already going through. Like personal development, I'm not a guru, but I continue to work on myself. I read books every day. I read these books over here. Look, we call Monton a lot. And I read a majority of those. This book I probably reread like 10 times. I kid you not, I reread this book like maybe 12 times already. Atomic Habits, a great book. Just keeps reminding me of what to be, how to stay grounded, and what I'm going to do for the day. And then other books that I read. In one, I journal. I write 3 things that I'm grateful for. It's right here, 10-4. I can, like right here. I wrote 3 things that I'm grateful for, and I have a whole list before that. And so that's just a little bit. But I have non-negotiables, things that I need to get down. I have my core values. And if I'm looking at phones in the morning, if I'm checking, if I'm answering your phone call before I've done what I had to do, whether it was a fitness day or not, I'm reacting. I'm not in an observing mode, and I'm an observer. So that's a little bit about that. I hope you understand that. And my background, just very quickly, I went to school. I educated myself. I studied a bit of sociology, played Division I soccer for a little bit. This was way back. And then I transitioned into chemical engineering. That's how I really wanted to do things. That's how I got down. Got into the class, was in the class doing dimensions and all this other stuff, calculations, did it for some time. And not that it was boring or anything to me. Chemistry is my favorite class, by the way, so that kind of led me into that direction. Kind of I don't want to call him nerd, but yeah. The guy helping people in class, very grateful and thankful for. With the teacher, great, got along, good relationship there. And so, very thankful. And then I had to make a decision. I wanted to get into business. So what better than to learn more underneath business? So I already satisfied requirements there, and I just went into that side of the degree. Went there, got my degree on things. And then, so I've been in the university community level, but thereafter, it wasn't as quickly as a transition, and even before that, there was transitions. But I've worked in construction, manufacturing, and the field positions. Not like, oh, here's the guy behind the desk working. Nowadays, you could probably see me doing that, but I've earned my keep. Like, I've learned a lot than I would say the average person at my age. And I help people, and people say that I'm wise, and I don't think like that. I'm like an old man at my age, guys. Like I told people the other day, I'm an old man at my age. I don't mean no harm by people. I want to get the best out of you, and not only in funding. I want you to be at your best. And so the thing is, I did those, and I worked in the field, construction, manhole, sewer, rehabilitation, getting into like I just forgot the name, the sewer. Yeah, actually getting into there, and then putting piping, and then like looking at the spray and things that were going in, helping out, and bringing tools to the job site, driving a camera truck. Manual stick shift is really where I learned it, and went up down Pacific Coast Highway, did a lot of little things in Los Angeles and out from Orange County, and a lot of those things. And also working in a manufacturing aerospace company in like a production environment where like you could go up the stairs and the owner's up there. You could look over and you could see the whole machines and blueprint room. And I worked the machines, and I was getting in there, going through chemicals. And I love that part, the chemical part. Chemistry guy. But then I got into the blueprint room and doing cast dines and blueprint readings. So I did that a bit, handing people their tools that they needed after what they needed that was in there. So I would allocate that and give it to them. Managing inventory count. And I've done ramp agent work. I was in warehousing. I've done various roles, not because I was unstable. It was more of a like, what is best suited? And I didn't have to do a lot of that. It was just like, let me gain more real world experience. That's real world experience. If you guys want to know that, real world experience is that. I know what it is to be blue collar. I know what it is like to, and I didn't have to go down that direction. No, but I've assimilated myself. I've always been adaptable. With my background, I'm Mexican, Salvadorian, American. I grew up in Orange County, California, so I'm more whitewashed and everything. And I can speak fluent Spanish. Sometimes, like yesterday, I spoke with one of my friends, who's a client in California. I know the area, and I've been there. And I was speaking in Spanish, and I was like, my words weren't coming out, and I let him know my Spanish sometimes. He was kind of cracking up. But then I continued in a little bit more English. But I'm fluent in Spanish. Sometimes the words, because I don't always say it every single day. So that happens until I say it more with specific people. My brain just can't even give you guys what goes inside my brain. But that's what I do a lot of. And I did that for some time. Later on, I got into a financial logistics position. And doing a lot of inventory count, data analysis, budgeting, spreadsheets, ordering, shipping and receiving, moving media boxes. I still had to do some physical stuff for a huge contracting company servicing HP&P South. And not that it picked up, that's why I kind of took it, because it wasn't going to pick up so much until the time that it did, and I'm like, I got to get out. I'm not going to do this. And so I stick with it because it would then slow down and it would come up, and then it would be slow forever. And so I'd be on the computers a lot more than anything. And I had to go to different departments. I had to go see the owners. I was working with them for some time. They brought me into their room meeting, and I would go through things on their board and look at the structuring of the process flow and help them understand how to better improve this, what we need for this department. I've seen for that department. Here's how to make this system more efficient. So I was going through things with them, and then the numbers, they would bring me in, and they found that out about me. Like, they got somebody. And you have me, you have me. It's like, once you have my loyalty, I have your loyalty, and it takes some time for me to really trust somebody, because people let me down a lot. And it's just, I work great in a team, I work better alone. Nothing wrong with that. And because I don't have to worry about others, I don't have to worry about somebody doing this so that I can get that a majority of the time. Like, I'm going to get after it regardless of things. And so those are a little bit of that, excuse me. And the other thing is that company got bought over. So we were still in the same building, like in the bottom building. I'm not going to get through all my story here, but we were at the bottom of a 3-story building. And I know I'm not going to say the name of the company, but the company bought the one that I was with. and then they went transition, and then they got rid of over 50 plus people. There was a big shift, and budget costs and others. I was already underpaid and I was undervalued. I kid you not. So I couldn't move up another level. The person in front of me, I'm not gonna say who, their name and all that, but I thought they would retire. I thought their wife, he was listening to his wife, or he was listening to himself, and then his wife told him, like, oh, okay. So now I really have to go. And I could have done something else, yes, but for more stability, and I was there post-academics as well, and getting more underneath that and knowing that I could move up another level, but it was just like a lot of that stopped for different departments and things happened. Company went down under. I had to go back on unemployment benefits, food stamp cards. Not a good feeling at all. I'm not sure if you've been there. If you know, then you know. But even worse, I think, is if you're like my personality, where you're more of an introvert kind and you're like not wanting to be seen in public. And even if you're not, you still wouldn't want to. It doesn't have to be that you're introvert. But it's like, I couldn't even lock eyes with the lady or the man in the register. I was just, here's my EBT card. Please don't look at me. And just walking out with my grocery bags once they were bagged in. Like, I just felt like at the lowest of the lowest. And so I didn't want it to continue to be that way. And so I knew that I had to make a change. I knew for myself that this wasn't it, like, again. And yeah, I could have taken something else, but at the time I was like, okay, I'm going to start this. And before the company went down under and I was relieved with 50 plus people, unfortunately. And I use that word, guys, unfortunately, very lightly, because nothing is ever unfortunate. The reason why it's unfortunate that you don't know something yet. That's what it means. Like, it's so unfortunate that you were declined. It's so unfortunate that you weren't able to go. It's so unfortunate that you don't know that information. You should be speaking in terms of the fortune of it, in the present and in the future tense. The fortune of what was in the past that'll help you now in the present. Your present is your past. If you look at it that way, there's a lot of little complexity to that. I'm not going to get into a different dimension, but having to go through those things and those hardships, I really understood. And even just going out for a meal, I felt so much of a burden. At that time, like, I wouldn't probably even say a word sometimes at a meal. Because I was just like, I felt like I was being judged sometimes. I felt like I was in a cocoon. Like, I've come out of my, what do you call it? The butterfly coming out of the shell. All that. And I felt like, for me, not even being able to pay for, or when I could afford, like, I just didn't, like, I didn't want to, like, you guys know that feeling when you don't have enough? When you know you do actually have a little bit, but you do feel like repelled. Sometimes you're like the person not interacting with others just because you don't want them to notice you. That would happen to me. Like, I felt like I wasn't invested enough into the people. Like, that's what I was about. And then now I'm like, my hands were sometimes shaking. Like, I didn't want to feel like that. And then letting them down, even though they wouldn't tell you I was a burden, that's what it felt like. My family's not like that. We pick each other up. And so, fortunately, before that company went down under, I was already preparing in that position. I was actually doing some work on the business side that I should have, but it was slow. And so I was already putting diagrams together. I can still go through one of my accounts. I'll probably show you guys later for a specific business, perhaps. But I was mind mapping. I was literally mind mapping and putting a lot of little bubbles, connecting them with a lot of little spaces. Every day I'd add more to it. I'd add more to the framework. I'd add even more. And then I'd put it all together. So I was already visually seeing my connectors. I was already seeing what I was going to do. Excuse me. And my friend, luckily for me, that day, before the company went down under or so, a couple of days, he was sharing with me a little bit more context for e-commerce, digital marketing agency, lead generation, health affiliate marketing, and other verticals. And literally that day, I couldn't get home fast enough. It felt like I just, Superman bursted through the door, or there was no handle for it to me to turn. It was just, like an abandoned home, just breaking through the door. And in front of me are my stair steps. I have my backpack just hanging on my left shoulder strap, my Jansen backpack. you know, the little ones. All black backpack. I can remember it very well. And it's right here. And I set it in front of my stair steps. And I shouldn't have set it there because I should have walked it over and put it in the closet. But it was just hanging over. I'm like, okay, let me put it down here. Gingerly walked around the corner. And not even a second later, in front of me, I'm staring at my kitchen. On the left is my kitchen countertop, the sink, the oven, and everything. And next to the sink, about 10 or 2 to 3 feet, I was going to say inches, but 2 to 3 feet, let's say this, and that's not exactly what it converts to. Okay. 2 to 3 feet, all you mathematical people here. Now, I'm very mathematical, but that's not what I was getting at. For 2 to 3 feet, and then I pick up my laptop, I set it on my dining table, on my brown dining table that I had at the time, a very old one. And like many of you, what I did is I opened it up, and I went to YouTube, digital marketing agency, e-commerce, and e-commerce even led me down to affiliate marketing in time. But I thought, okay, let me work with a digital marketing agency, and then I'm also going to work with the affiliate. So I did the digital marketing agency at around the same time I was doing the affiliate stuff. But I went full board digital marketing agency, lead generation, and then over time, also I helped people out in the health space. I got health clients in that, and then I went into even more clients, and that's what even pushed me down even to this other interest of mine, which was helping people with their back pain. I've had those issues, and so I thought, how do I make this more passive? And that's what brought me down the whole health space even more, and I found even a passion for it, and I became an expert in that as well. And I still have a lot of that. I still have a lot of people every single day who are consuming my stuff when it comes to that. People from Pinterest, from SEO, from blog, from YouTube videos, from social media. And I'm so grateful and thankful that I've been able to share with people my own experiences and show them exactly what I've been able to do, whether it is a product or service purchase or not, just what they can do by themselves. I've created a custom roadmap for each person day by day on what to do to alleviate that acute, subacute, chronic sciatic pain, because I know that. And so I've shared with people those and where I've come from on that end. But then I got into people asking me always, like, what is this tool? What is it? Like, let me just put a subset of this. And I started creating a little bit of content around software, landing pages. And I have experience building all of that. I've done it myself. I didn't outsource that. I didn't say, here, subcontractor, here you go do the work for me. Can you do that? Can I do that now? Yeah, but I know faithfully like what it takes, what they're doing and what they're doing wrong. Like, I'll correct them. I can go run my own ads if I wanted to, and I have them. I can shut them down whenever I want to. I understand conversions. I understand the numbers. I can go to my landing pages right now that I'm split testing and tell you how much the percentage is on what each page. I tell you which would be the best page even before I've actually finished. There's so much. But with all that said, I just want you to know that you are in the best of hands. It's better to know somebody and their core values. That way you're not on the personal side, not on the business. I'm not speaking about what's your core value, vision, and mission in business. What's your differentiation? What's your USP? What's your disruption in the market? What are your sales? No. Who am I working with? What's their passion? What's their mission? What drives them? What wakes them up? Why? What's their why? Who are they? What's their identity? How's their behavior? How do they think? Because if you don't know those things, you're only assuming who I am. You're only assuming who I am. Oh, he's this guy who's trying to give me a loan and he's going to push me to do... No, I'm not. I'm not like every other person out there. And it's bad out there. All these people will do this. It's not what they're saying, it's what they're not. And it's how they're saying it. And I told somebody the other day, I've said this over again. Of these 5 or so many lenders, brokers, organizations that have contacted you, how many of them do you actually know anything about? And I don't mean about their business or the owner's business if they're hired on as a sales rep. How many of them do you actually know a thing about? In my head, I'm thinking, not to my surprise. I don't have to say it. Sometimes I will, just so they know. That doesn't surprise me, and it's how the market is. It's how the industry is. They're very 9 to 5. They're very transactional. That's the word. They're very, either it's short term, it could be long term, but they're reading a script, or they're not entrepreneurial. They're not like, this person only gets funding. Like, I'd rather know that there's somebody who understands value, understands characteristic fundamentals, understands efficacy, understands that they'll be in your corner no matter what. They won't bait and switch you. They won't overpromise and underdeliver. They won't bombard you. They won't pressure you. They won't tell you something because it's in their best interest. And I go through all of these forums, guys. It's a big problem right now. All these people being bait and switch, telling them they can get a line of credit when you can't. But people fall for it because, I'm getting a big amount. People will send me emails every time. Michael, is this real? Is this not? I'll validate it. Now, if you have the right offer, I'll even tell you, go to them. I'm not afraid to do that. Oh, you already have a relationship with them? Yeah, go to them. That's where it would make most sense. Now, if you didn't, or even if you did, a lot of the times I'm able to beat the majority of offers that are out there. It's not a surprise because I know what I'm doing. A lot of these lenders I built a great, and I don't just say that, excuse me, personal and business related, not just on the business, personal and business. And so when they turn to me and I turn to them, they know what they're getting out of me. They know how efficient. I know when I don't need to do this. I know when I need to do this. I know when I need to do that. Or I'm so efficient in my systems and how I do it, in my processes. And if you're not that same way, why aren't you? Is it causing you to go backwards? Is it causing you to stay where you're at? Like, people have asked me, and I was in a presentation not too long ago in a room full of people. I was brought on in a Zoom call. And this is on the honest truth, and I'm going to leave you guys with this, and I'll go to the comments. I know what she asked and how she asked it, but like an Amazon seller, for example, telling me that they're in a surplus amount of debt. I knew the number. I can ask for more about the number. I didn't get into too much of the details. Not the time, place. Asking me, how do I get out of this? Like, could buying more inventory or this and that give me, like, could it? Potentially, should it? That's the better question to ask. We can get into more numbers, but like I said to them and like a lot of people that were in there, complete silence. And when I went into what it comes down to, it has nothing to do with your business. It has nothing to do with how much funding you can. It's not how well you know a product. It's how well you know yourself. It's who you are at a core, at a nucleus, at an atomic level, electron, protons, whatever you want to call this. It's who you are that's causing a lot of these problems. And who you are could be stopping you from learning more from what you should be doing. It could be stopping you from having the right behavior and taking the right course of action. So if I reverse engineered how you got yourself into that debt and why you're in so much problem and so much pain trying to get out of that, consolidate, or trying to get more funding just to put yourself in even more debt, you're not going to clear this up as fast. Like, it could be a business. Yeah, it'll fall down to a business reason, or more. But what I'm seeing is the person holding it back is themselves. So until you realize that it's you who is the problem, you're the root of the cause, you're going to continue to do the same thing you've been doing over and over. Even with giving more information on how to do it correctly, you'll fall again in the same way, because financially, you may be in a place right now where you're not at depth. You don't have to be the most literate, but if that's what's holding you back, why is your financial aptitude holding you back? Well, because I have so much going on. What do you have going on? Okay, now what do you have going on the personal side? You told me what you have going on in your business. I know your schedule. What do you have going on your personal side? Well, I got to take the kids and we're going on vacation. And what are you doing on vacation? For how many days? What do you do in the mornings? I'm putting my makeup on and I'm, looking all glossed and glittered up and talking to my girl or girls. For how long? For about an hour before I head out? What do you guys talk about? Well, maybe not that deep. But if that were to make sense, it were to make sense. Why I'd be asking that. Well, do you think that if you woke up an hour earlier, or if you took that time to get on your laptop and work? Like, what's going on, man? You have an hour you can set aside. Like, I'll be on vacation soon, guys, and I kid you not, I'll very likely be on my computer. I'm that guy. Not because I'm a workaholic, but I'm that guy. And you can call it, like, what are the millennials using these days? Him. Like, I can be him is what they're saying. I guess the word is. And I'll sit in a lobby or wherever I'm at in the room, just get 30 minutes at least. I know we're going to send these emails. I'm going to put these questionnaires, forms, upload this content, make sure this gets put here on this calendar. Okay, done, ready to go. I feel good for the day. Let's go ahead and go have some fun. And so that's what you guys got to aspire. That's what you guys got to feel in your bones. You got to feel that sensation coming down from your head down to your toes. You got to feel that without emotionally being compulsive, being composed. And you just feel that. You feel that in your head. You feel it. You feel that sensation. And that's what you want to feel. That's where you know you are at your best. That's when you know tienes coraje. That's when you know you feel like nothing will break me. But until you get to that, you have to figure out what the steps are. So that's what I'm going to leave you guys with. Let me go to the comments. I may not work on vacation, but I don't want to fall too far behind. Scrolling. Hey, welcome in. I did see you say hello earlier. I just couldn't get to the comments. I think that oatmeal is really getting to me. How are you, Mary? Yes, I do. Perhaps you came in a little bit later, but the topic of this conversation, and that goes for everybody, SBA 7A loan alternative or alternatives. But I did get into some of the qualifications on an SBA 7A loan, why you would and wouldn't qualify. I see people on my website every single day filling out, going through questionnaire forms. I can track to see like how many people don't even qualify. There's a quiz questionnaire that I created. It's very crazy, guys. Like I'm so efficient at what I do that like what I put together is a big questionnaire. Like I sat for months putting this together, like finalizing it. And it's like if you said no to this will take you down this question. If you didn't do this, it'll take you down credit, cash flow, collateral. If you had this amount of revenue, this wouldn't qualify you, then this would qualify you. Here's the result page. Boom, boom. The result page is here. You can get started right then and there. You don't have to wait for me at all. Get started, get in. I'll review things on the back and you're done like that. Boom, out the door, you get your funding. Simple. And there's different processes to everything. But yes, I do. Is there something that you've tried already and hasn't worked? I'm not sure if you still are in here, I can see. But is there something you've tried recently? Have you been declined? Good question, Joaquin. That's the name that I sometimes, you got to say it slower. I mean, that's what grants are. But yeah, there are grants for trucking. I'm not going to get into them in this video. But Joaquin, and this goes for everybody, Mary too, everybody. I said this in the beginning, but I have a 900 plus, more or less, grant exclusive list that keeps getting rotated and updated monthly or whenever it can be. You guys want that. You guys would want to have that. No question, no extra thought about. And what this will do is it'll alleviate a lot of stress from what you're going through, not only in business, but just what you're thinking day to day. If you just sit on the couch, you don't even want to watch the TV. Tell me if I'm wrong. You don't want to. But it's not even that you have to. It's just you need it for occupying your mind away from the problem or problems you're going through. And that's not a way to entertain. It's not a way to decompress, I believe, in any way, because you're just going to come back to the same thing. So that'll be helpful. And if you guys want that, fill out the questionnaire form, please, on my website. If you guys can't get access to it here, let me put this in the comments. Sometimes TikTok doesn't show my link. I don't know why they're like that. Because of my type of content, not geared towards or however the link is. Okay. Yeah, and if you haven't tried, it's okay. And I want to bring that up too. I always, guys, like entrepreneur-wise, like I need to know what you've done, what you haven't done. Like you can only imagine how many people need help online. What the difference is between people that I've helped online, not online. It's substantial, but knowing what you've done, what you haven't, like, have you been shopping around? I don't want to get you into an application knowing that you've already looked for 3 to 4 lenders, let alone you've been declined. Yeah, I can still help you even if you didn't get declined. You're just shopping around. And when people, and they've asked me, they've told me this, like people who try to bring me on as a broker for them, I don't just accept anybody, and I vet everybody in. And I don't vet people in just on how their acumen is on their business and what they do. How can they deliver? How do they deliver as a person? And they're very one-dimensional. A lot of these are one-dimensional. Older people, even younger people who don't get it, who just don't get it. And so they don't build anything very long-lasting for themselves in business or in a personal brand, business personal brand. And the thing is, like people will tell me, do you want to, I'd love to have you as part of my team. I'd love to have you sign up with, and I told somebody in a live once, why would you love it for me to sign up? What is it about me that you find interesting? They didn't say even another word. I don't even know if they left before that, but I think they were still there. They just didn't answer me. Because they couldn't answer that. They're only assuming, they're only looking at it as a transaction. Whether they wanted to say it or not. Whether that can help them or not. People have come up to me, oh, well, I can bring you over 30 to 50 people a day or however many in a month. Yeah, but who are you? And even worse, if somebody only assumes that I'm in it for money, I'm not in it for money. I get it's a business, but if you're concluding with that, thinking that, hey, look at it for something else and just, hey, I knew a little bit about you. You never said anything about you, even when asked or not. You're very sales oriented, like very transactional. And so they were only assuming who I am. They're assuming my behavior. They're assuming my identity. They're assuming my core value and values. Just with that one response alone. I was like, done, out. I still continued the conversation, but I knew I was like, done. They probably knew. They probably got caught themselves in it, like dealing with somebody of a higher standard. Dealing with somebody that I haven't dealt with before. And that's the honest truth. But yes, there's different options like creative credit back funding. I'm not going to ask you what your credit is right now, what credit challenges. I'm not going to go through all that. I can go through it at a separate time, But in the bio, or you guys can email me, it's in the comments. I have nothing to hide from you, period. And like I said before, you see me speaking here, I'm already tired, but I don't talk much. I just get my work done. Like that kid in class, like I'd get it done and I'd answer. People would listen like very carefully because they needed the answers. Or sometimes I need an answer from someone in a different class. But normally I would, when I'd participate, like even when I was wrong, like I knew how to correct it and then how to get it right the next time. It's all about how to correct your wrong and make sure you're doing things how you should be. So I don't just give it out just publicly like that. But what you could do, Joaquin and Mary and everybody, is if you go to the bio, there's a link you can click on. I would go through one of my videos. So if it's my link tree, here, should be that one. I would click on at least the first one It might not apply to you. Here, I'm opening it up now. Let me pause this. And then I'm gonna go to my channel and you can go through the search. And then I would type in something like 100,000 is I believe what I had the video name under. So here it is. But if you go to one of my most recent videos, you're gonna see one that says 100,000. Here, let me go here. There it is, 13 days ago that I released this video too. And it's about a 19:59, 20-minute video. But I'll give you some of the grant opportunities. I think I spoke a few about the trucking, and that gets updated, things get updated. But trucking isn't always specific to just one grant. Like in other industries, it's not just specific to one, like healthcare is specific to just one. You can kind of tie different grants to a specific industry, if that makes sense. Yes, I can, Mary. Yeah, that it's not as complicated as you think it is. If you thought that, it's very straightforward. Like even little things like ChatGPT could create for me a grant proposal for, and then you say your industry name. I think it's very accurate. But there are a few more things depending on who you're presenting it to. So wherever you're applying, they're going to ask for specific things. Other times that they won't. So you'll have to add in a field here or there. But I've helped out people with their business plans, whether it's for a grant or something else. I'm not always as hands-on on that, or as I used to be, because of what it takes. And I really don't expect anything being paid out to me when it comes to that. And the amount of time consumption and energy it takes for, like, I've seen it. And so I can also guide you to certain business funding experts that I've partnered with, or that I know at least of, and that are very reputable. The ones that actually like are in it every day. Like I'm in it, but they're in it. They're like consistently in it. So you have to kind of understand that, and there's a variety of that. But I've seen a lot of business plans for inventions, for grants, yeah, help people revise them, for SBA loans. Does anybody else have any questions? One more minute. It's already 12:38. Day's going by fast. Normally don't look at the time. There it is. Yeah, it's possible. I mean, there's CDFI stuff, but real estate can be a little bit trickier. They're not always going to get approved for speculative investments, passive investments, primary home, resident, cashing out, refi. It depends on the goal or goals in mind and how you plan to use the working capital or the grant, I should say. So it just varies on what structure, what's the nature of your business. We won't cover all of that right now. I'm kind of at the tail end here, but it just depends on some of those factors. A real estate company of any kind, and I've been doing this for a while, fix and flips, foreign nationals, commercial real estate, rental, duplex, like we can go on and on about this, multifamily. Like this is stuff that I'm in every day too, and I know my stuff. You're better off like going through credit, trying to do something through your own credit if it's there. If it's not, while you're looking for a grant, like what is the purpose of this grant is what I would need to know. Like what exactly Did you need it for? How are you applying it? You know what's sad? When I look at the ratio, I'm not going to say the exact number, but how many people were subscribed to understanding how to get funding? It comes down to education. A lot of people who unsubscribe are just very intolerable. I could say the word incompetent, but I say that lightly. But a lot of them just really don't like get it. No matter how much you share something or you put it in a story for somebody for it to make sense, they're still going to be driven by their own ego, their own arrogance. They're going to learn this the hard way. And even when they're still on the list, it's like they are not as cautious about where to go get funding. When you're just so invested in it's me, but I should get what this guy Michael didn't told me I couldn't get anything. I'm going to go find out how I can do it. Like, go for it if you want. Like, it's not uncommon, but usually when people come to me, it's the only place. It's like the last destination where you're like, oh, or it's the first destination. You go, oh, yeah, figure that out. And he knows the stuff. And so you just got to be cautious about who you give your information to, because believe me, I've been there. Whew. And then if you're getting your credit shopped, like some of these companies will, like auto loan companies, you're done. And then after that, you're getting a hard inquiry. So they'll tell you soft inquiries, but then you find out somebody pulled your credit. Now you have a hard inquiry. But guess whose fault that was for not listening? And sometimes you don't have to hear somebody to tell you that. You can see it and sense it from a mile away. You are welcome. Let's do at least 30 more seconds. I was watching like an SBA 7A loan video the other day. I was like, oh. What was said wasn't bad. It's just like sometimes the information there's some stuff that's unaccounted for, and people only follow people because of their influence or because of, in terms of like following. Like, don't fall for that just one metric, that if somebody has a large following, that they know exactly what they should know. Some people just make it up on the spot. Like, I was presenting in a group the other day, and I told them, just be careful about who you watch and listen to, who you read information from. Because I can go down a list, and I go, I don't know. Even if they knew I don't want to go underneath that person. Who are they? Like, they're like that, they're talking that way, they're that kind of person. No, I'm not going to do that. I'm not going to lower my standards just for them, and they can earn from me. No. I want to give what somebody can give and earn that deserves it, that knows at least a little bit about. They don't have to know everything. Just a little goes a longer ways than nothing. And because I look at things and I go, I'm going to go help out that broker. I'm going to go help out that real estate agent. They're up and coming. Okay, let me help them. Are they family? Are they not? That's not the point. They know their stuff. That's what I want to turn to. That's what I'm going to go after. But who are they as a person? I'm going to help their business. I'm going to help a local small business there. I'm going to help them out because I know they're going to be able to put food on their family table. But also, they're giving back. We're helping out another small business. We're affecting Michael. We're affecting Sally. We're affecting John in this way. Now that he had that, he's able to go ahead and give back more. That's going to help him raise his confidence, give even more back, make higher impact, show us even more. And so a lot of you don't think that way. It's only one dimension. And it's unfortunate. And I've had people who come back to me, and I know past 30 seconds, I'll finish with this. Like, I've spoken with a lot of real estate investors, not just real estate investors like top, but in other industries as well. And even then they'll tell me like their kids don't want to be a part of their business. Like there's not just real estate investors, they have other businesses. Like they're close to retiring. And I asked why don't they? Or they're off in their own ways. And maybe, I went over with them a little bit about what could happen if they wanted to. But just understanding a little bit more about where you're coming from and why it's working out or not makes a big difference. For me, at least. I don't know how you see it. All right, everybody. Appreciate you all. Thank you for tuning in. Have a great rest of your afternoon. 12:46 here, PST. / evening. Oh, got a question. Sorry, I'm not sure if you're asking that as in a question or you're saying is it best to get an SBA 7A loan or just an SBA loan in general? I'll just answer that here. Yes and no. It comes down to what are your needs. Can you, one, qualify, but then two, what are your needs? Like even before I ask, can you qualify? Can I go through this with you? What are your needs? Like, no, like that wouldn't make any sense to me. You actually needed a 2-year term. You needed at least a 6-month term. Why would anybody want to give you a 10-year term, let alone 5 years? For one, you don't need it. It's good to have it. You're going to be accruing interest, although it's low, because your terms, your rate, your overall repayment drags out. But think about how much debt you're going to be in. Think about where you would be if you just took something shorter term. You double, triple, quadruple your ROI, or did you need it for more working capital reasons, to purchase equipment, to then pay out or pay down other debts, completely eliminate it? Like, what are you trying to exactly do? That way I'd better understand, is now the right time? Because SBA 7A loan, guys, are not a joke. There's a lot of documentation. There's stuff that's going to be asked for. But I hope that answers it. Okay. I do have to get going. Appreciate you all. Thank you for tuning in. All information in the bio, in the description, and I'll see you all on the next one. Take care. Bye.